Yeah, good morning, everyone. It's good to be here presenting again our quarterly results, which we published on the ASX this morning, and good to have Pat here with me as well. The agenda for this morning is as we typically run through these webinars. We'll go through the results themselves, then we'll go and talk through the committed portfolio, which is now 3 operational projects and 1 construction, and talk about our development portfolio after that. We'll also have a bit of a discussion on the J-Power transaction, which was announced firstly in March and then also last month, and then finishing up with some Q&A. The corporate snapshot here, a little unchanged, but at the end of last week, market cap was $74 million. Total debt at the end of March, $759 million, with $88 million of undrawn facilities and cash of $56.4 million. Just to recap for those that are new to the story, but GNX, we're developing a portfolio of large-scale renewable energy generation and storage projects that covers batteries, pump storage, hydro, wind and solar, and principally focused in Queensland, but also an asset in New South Wales. Totaling over $1.1 billion in committed capital and 150 megawatts in operation and 250 megawatts under construction. We're also increasingly turning our focus toward a large development pipeline of 2.3 gigawatts, which we're readily prosecuting and looking to take the first projects through to final investment decision later this year. And of course, the feather in our cap is the pump storage hydro project at Kidston, which is the first pump storage hydro project in over 40 years. Just to recap on the portfolio along the eastern seaboard, the Kidston Clean Energy Hub is our flagship and where the company started, inland from Cairns and Townsville, and that's comprised of 3 projects: the operating 50 megawatt Kidston solar farm, been operating since 2017, the under construction 250 megawatt Kidston pump storage hydro project, which is scheduled for energisation in the first quarter of next year, and the development project, the 258 megawatt Kidston wind project. In total, the Kidston Clean Energy Hub is over 550 megawatts of 3 technologies: wind, solar, and pump storage hydro. So pretty exciting world first development there. Down the east coast in central Queensland, we have our operating now 50 megawatt 2-hour Boulder Cone battery project, commenced operation in November 23. In southern Queensland, our Bully Creek development project, which initially is targeting a large-scale solar farm, followed by a battery project. And then in Gemelong in New South Wales, we have our 50 megawatt operating solar farm, been operating since 2021. Just been alerted that I'm showing my notes, which I don't understand why. Just give me a second, everybody, while I just reshare this. We're just having a couple of technical issues. Hang on. Got some technical gurus here helping me. Hopefully that's going to fix things. And I haven't really showed any new materials here. This is all stuff that's been in our presentation for a little while, but apologies for that technical issue. Just a recap on the portfolio slide just here. But moving across now to the financial results, if I can. All right, and I will hand over to Pat to take us through the results from the quarter. Over to you, Pat.
Thanks, Craig. Okay.
Okay, we should be good.
Yeah. Thanks, Craig. Apologies for the tech mix-up. The solid performance for the quarter from the 2 operating solar farms. Kidston Solar Farm generated 25,619 megawatt hours, and in Gemelong generated 35,047 megawatt hours. This is the first full quarter of Boulder Cone battery, where it dispatched 7,152 megawatt hours in the quarter, which is the peak time of year for the battery to be operational. So it was a good performance. The completion of the powerhouse excavation at the hydro was a major milestone also achieved. We've continued to have 0 lost time incidents for the quarter and 0 serious environmental incidents. We've announced a binding transaction implementation deed signed with J-Power, and as I mentioned, the first full quarter operation of Boldacom. On the revenue side, it was a very solid quarter for revenue, total 9.6 million, 2 million of which was from Kidston Solar, 3.4 million from Gemlong Solar Farm, and an improvement on the average dispatch price to $97 per megawatt hour, which is encouraging. And the first full quarter of Boldacom, totaling 4.2 million, including that is 1.4 million of other income, and we had an average price of $385 per megawatt hour dispatched. That brings the total revenue for the year to 20 million, which is above what it was in the prior corresponding period of 19.6 million, acknowledging that Boldacom is now an operation that wasn't there in the prior corresponding period. Operating cash flow of 2.4 million is very encouraging. Closing cash position, strong position of 56.4 million as at 31 March. And the refinancing of KS1 JSP is very well advanced, with all the current lenders enthusiastic to refinance the project. And that project is well advanced, and the data room is open, and we're taking Q&A from lenders at the moment. And just a quick snapshot of where our debt facilities are at. As discussed, KS1 JSP is currently under refinance. Once that is refinanced, we have been in talks with Infradebt, which is also due to be refinanced by the end of December, and they're open to further those discussions. K2H has fully fixed interest rate out to 2036. BBP senior facility, again, out to 2036, fully hedged. And then we have a corporate facility of $35 million. So we're 99% hedged out to 2030, and the average interest rate is about just a nudge over 3%. Back to you, Craig.
Thanks, Pat. Another good quarter indeed, and good to see the recovery in wholesale electricity pricing as well, reflected for Gemlong, and also Boldacom, a strong first full quarter of operations. So I'll just take everyone through the committed portfolio. Now, this slide's pretty familiar. It's been in our deck for some time, but really what it shows here is our 400 megawatts of committed projects, Kidston Solar 1, Gemlong, Boldacom, all now operational. The last project to come online being the hydro project, where we're expecting first revenue in the first half of next calendar year. And really what we're seeing now is we're on the cusp of this step change in the business. You see FY24, we have a contribution from Boldacom. It's a little bit later than we had previously been showing due to the fire incident, but now operational and contributing FY24. And from FY25, we start to see contribution from the hydro project with its first full year in FY26. So what that looks like is an average of $95.6 million in revenues out to 2055, 83% of which is contracted. And that's a really good place for us, and how we're looking to model the portfolio going forward is to have a highly contracted portfolio, but to take discrete exposure to merchant pricing where we think it's attractive, and that's how we've been operating in the past as well with our merchant exposure. High levels of EBITDA, 73% margin on those revenue figures, and minimal sustaining capex. So a lot of that cash is flowing through to debt and to equity. Just to recap on our operational portfolio, this is a new slide, but sums up the 150 megawatts we have in operation. Kidston Solar 1 has been operating since 2017. It's got a 20-year PPA with the Queensland government, still got about 15 years to run, and that's been portfolio financed with Gemlong, and as Pat was discussing previously, the refinancing of that senior facility is underway. 50 megawatts with Gemlong, operating since July 2021, and that one is completely uncontracted, so it's generating revenues from spot electricity prices and large-scale generation certificates, and again, portfolio finance with Kidston Solar 1. And of course, pleasingly, our Boldacom battery is now part of the operational portfolio. Commenced operation in December 23, and we've just had our first full quarter of operations. Just to recap, it's a 20-year warranty with Tesla and a 20-year operations and maintenance contract. So If it breaks, they fix it. And it's also got a Tesla offtake over a term of 8 years, which is quite an innovative fixed and floating offtake structure. The chart below shows how that works in a given year. And just to recap, Tesla is operating the plant at the moment using their auto bidder algorithmic bidding technology to operate in the energy and 10 frequency control ancillary services markets, and every 5 minutes optimizing the dispatch of the plant to maximize revenue. They also provide us with a revenue floor guarantee, and in exchange for operating the plant and providing that guarantee, we share a portion of the upside. The right-hand side sort of shows the total revenue stack, and the dark green being the level of guaranteed floor revenue for a given year, and the light green being what we would retain, and the blue sort of showing that we would share a slice of that upside with Tesla. That's all operating well, and yeah, good to see the first full quarter of operations, and we're looking forward to the future for performance and contribution of the battery. Over to the hydro, our flagship project, and it was pleasing to share a few updated pictures in this presentation and in our construction update last week. Just to recap, it's 250 megawatts, 2,000 megawatt hours of storage, and it's the first pump storage hydro project to be coming online next year in 40 years in Australia. So a flagship project indeed for GenX and also for the national electricity market. The offtake structure, as we've mentioned before, this is 30-year offtake with Energy Australia, where they'll take the full dispatch rights, the full profit and loss of the plant, and we'll be receiving a fixed income over the 30 years, which is important to underpin the long-term concessional debt facility we have with NAIF, $610 million. It's been constructed under a fixed price lump sum contract with John Holland and McConnell Dowell, and as we announced last week, there's been a slight delay to the energisation date. We're now targeting energisation in Q1 calendar year 25, but we still should see first revenues in the first half of calendar year 25. The picture on the right shows the status of the construction, and just to recap on the design of the scheme, this is a good slide and a good photo to talk to. Essentially, the scheme is about building a dam on top of an existing mine pit, and you can see that dam really now taking shape, and it's getting very full of water, and then using the existing body of water, which you see in the foreground there, the Eldridge pit, as the lower reservoir, and we've been steadily draining water from that pit into the new dam over the last few months, and you can see that height differential now really starting to take shape, and connecting them through an underground power station and series of waterways. And if you just see where my mouse is, I don't know if that's visible or not, but the intake canal structure there on the right is where the two intake shafts will drop down into the underground power station, which is some 240 meters below the surface. So pretty exciting bit of infrastructure. Just to recap, this is the bird's eye view of the scheme when it's completed, and you can see that dam on the left, which we saw in the previous image, and the body of water sort of in the top of the middle picture is the lower reservoir once it's been fully dewatered. The operation of the scheme is to essentially use the gravity potential of water as stored energy. So during times of peak demand, we open a valve and let the water run from the upper reservoir to the lower reservoir through reversible pump turbines to generate up to 8 hours of electricity. And then in off-peak times, when there's excess energy in the system, we flip the switch and turn the pumps on to pump the water back uphill at an efficiency of about 80%. So just like a giant battery, but using water rather than chemicals as we have at Volcan. The picture on the right just shows the underground works, which we've talked to a number of times, but pleasingly, we're now getting to the pointy end of the underground excavation. As at the end of April, the main access tunnel was complete, all the construction adits were complete, the water intake shafts complete, the two support services shafts, cable and ventilation both complete, the transformer hall complete, the powerhouse crown complete, and pleasingly during the period we completed the excavation of the powerhouse cavern, which is an enormous, and I'll show some pictures on the next slide, enormous sort of 80 meters long, 50 meters high and 25 meter wide void in the underground. The tail race tunnels part 1 has been completed. That's from adit 2, which you can see with my mouse, back to the powerhouse. That is now completed. The last piece of underground excavation is from Adit 2 out into the Eldridge pit, which will rely on the water being dewatered below the portal. Those works commenced this month, and they're tracking to be undertaken over the next few months, and punching out into the lower reservoir once that water level has dropped down. A few pictures of the powerhouse. You can see on the left, the powerhouse is now at its final levels. You can see that where the MAT comes out, that's the operating floor, and then it drops down where the large pump turbine equipment will be installed. And a few images. This on the right is looking back up from CAO3 to the main access tunnel and the operating floor, and then we've got some shots into the tail race and head race tunnels into the walls. Some more pictures. The commissioning program is, the fit out works are underway. We've got our gantry crane installed, and it was fully commissioned this month with the test weights you can see in these images here. Now those works are moving forward in earnest. This vehicle on the left is a self-propelled modular trailer. This is how all the equipment will be moved underground. Each one of these axles can turn 360 degrees, so it's quite a maneuverable vehicle to get all the equipment down, including the transformers, the main inlet valves, and all the heavy equipment. And that will all start to be transported underground this coming quarter. And just to recap on the construction timeline, you can see on the left that the dam is now substantially complete, save for some works to the intake canal structure. The underground excavation is substantially complete, save for the tail race tunnels out into Eldridge pit. The Powerlink transmission piece is still progressing well. All the 3 substation pieces will be complete this quarter, and it's now about transmission tower erection and stringing of the conductor, and that's going to be happening throughout this year, targeting completion in very early Q4. This year is, however, all about the fit out of the underground power station, and so that starts with civil works. There's a lot of concrete. I'm going to talk about that in a slide coming up, and that followed with the equipment installation, some of which is embedded in concrete, some of which is not, and that's going to be the focus of this calendar year for our EPC contractor. And as we announced last week, energization is now looking at Q1 2025 from Q4 2024. And look, it's disappointing there has been a slip, but this is a highly complex multidisciplinary project being done for the first time in 40 years, and we're managing the program as efficiently as we can, and pleasingly, it's a very modest slip that we announced last week. Just added this slide to the presentation just to give a feel for what this calendar year will be focusing on the rest of this year, and this just gives an idea of what the powerhouse will be looking like and in the construction phase and when completed. You can see in the image on the left, that's a cross-section of the underground power station, which is essentially a 5-story building underground, comprised of 5 levels. The draft tube level, which is where the water drops from the pump turbine down and through to the tail race tunnel, and you can see a cross-section of that on the far right in the blue, the draft tube being the lower yellow piece, and that big vertical gate here where my mouse is, that's the draft tube gate, which stops the flow of water in and out of the draft tube. The next level up is the spiral casing and turbine tube. So the water, you'll see it comes in through the head race here, spins around, and then drops down through the draft tube and out the tail race tunnels. The next level up is the main inlet valve. This is where we'll operate the valve that will govern the flow of water through the spiral casing and turbine. And then above that, the generator floor, which is where the water will spin the turbine, which will in turn spin the generator. That is connected to the transformers located in the transformer hall, and then to the surface via high voltage cables. And then above that is the operating floor, which is where the main access tunnel connects and where most of the operations will be happening. But a very complex but exciting phase of the project for sure, and pleasingly we're now getting started on that with first with the embedded concrete components, and that's got some interesting statistics: 360 tons of structural steel, 7,800 meters cubed of concrete, and over nearly 1,300 tons of reinforced steel in that concrete. On the right, you can see this blue shaded area is all concrete, and so a lot of these components will be embedded in concrete. That's 51 concrete pours over the build out. So yeah, a pretty exciting phase, very complex, and yeah, we're looking forward to bringing more updates as we get on with it. Moving on to the development portfolio, the next stage in our development is the 258 megawatt stage 3 wind project. GenX is developing at 50/50 with J-Power, and it will complete the clean energy hub at Kidston, taking it to over 550 megawatts and the trifecta of wind, solar, and pump storage hydro. It's located on the plateau to the south of the hydro and solar sites, about 17 k's away, and on that plateau, we'll be locating 43 Goldwind 6 megawatt wind turbine generators across quite a large area. But the project has quite an attractive resource, which has enabled us to secure the offtake for the project, with 80% of it contracted, 20% to be left merchant. That comprises a 15-year deal with Stanwell for 50% of the project offtake and 10 years with Energy Australia for 30% of the project output. We're still targeting a final investment decision later this calendar year for the project, which would see it operational in late 2026. But a lot happening on the development front. We're looking forward to bringing some more updates as we get on with the financing of the project and ticking off the final development milestones ahead of a final investment decision. Bully Creek is the other major development project targeting a final investment decision this year. Pleasingly, this quarter, we announced the appointment of PCL Constructors as our preferred EPC contractor, and we're now busy working with them on completing final design and scoping and pricing the project. That's a pleasing milestone to get on with the development and getting it ready for a final investment decision. We are continuing our offtake discussions alongside the piece with Fortescue, and we are confident we'll be able to secure offtake to underpin a 775 megawatt solar farm. Those discussions are nearing conclusion, which will enable us to commence the financing process imminently. But pleasingly, this site is very construction ready. It's got all of its planning approvals. It's got a very well-established solar resource and a lot of work done on the grid connection. So all on track for final investment decision in the second half of this calendar year. Just in terms of the layout, just to recap, we've shown this a few times now, but the solar panels are shown here in this site in blue. That's 775 megawatts AC, nearly a gigawatt DC. In the top of the site is this green, block here is where we'll be locating the Bully Creek Clean Energy Hub substation, which will connect 5 kilometres north into Powerlink's Bully Creek substation, which is where the Queensland-New South Wales interconnector connects on the Queensland side of the border. And in this red diagram here, that's where we'll be locating the first stage battery, which is expected to be 400 megawatts, 1600 megawatt hours. Just on the battery, as I said, 400 megawatts, 1600 megawatt hours. And we think it's in a really good location and really strategic for a battery to earn some unique revenues. We are still continuing with our tendering process, which we initiated last year, and we're continuing those discussions with the suppliers to determine the supply strategy. We have commenced the grid connection process with Powerlink in the meantime, which is the critical path activity for this project. And of course, the offtake discussions are continuing as well. However, this is looking like a final investment decision in 2025. The reason for that is batteries. We can build this a lot more quickly than the solar farm, and therefore, it's important to get the solar farm committed, get that grid infrastructure built, so the battery can follow and connect in when it's ready, sometime in 2026. We've shown this slide a few times as well, but our funding strategy for the pipeline remains the same. It's to build high quality projects that are going to be very attractive for third party equity and also for high levels of project finance. And that's really focused on securing high quality counterparties to the project, both construction counterparties with Goldwind and PCL, but also in our offtake partners. And we've lined up quite a high quality suite with Fortescue, Stanwell and Energy Australia, plus the other discussions that we're having. We've already sold down a portion to J-Power, who are funding a lot of the development costs, but there is a strategy to bring in equity partners as part of the final investment decision. that will essentially carry a large portion, if not all, of GenX's equity in the project. For those processes, we've mandated advisors to run right alongside the debt. They'll be kicking off pretty shortly, if not early this quarter, certainly by the end of this quarter. So it's very, very pleasing to get the projects to a point where we can commence those processes. The idea being that we will retain an equity interest in the projects and earn management fees to manage the operation and construction of the projects. Just thought I'd touch on the J-Power transaction, which was announced first in March, and then we announced a binding proposal from J-Power and a transaction implementation deed in April. As we announced on the 12th of April, we signed this transaction implementation deed under which J-Power is proposing to acquire 100% of the GenX shares it doesn't already own. Remember, they already own 8% of the company. The transaction is structured by way of a scheme of arrangement, and the price that J-Power is proposing to pay is 27.5 cents in cash per GenX share, obviously subject to a number of conditions which are being worked through at the moment, including, however importantly, the approval of GenX shareholders at the scheme meeting and the court approval. Uniquely and concurrently, J-Power will be pursuing an off-market takeover bid at a slightly lower price of 27 cents in cash per GenX share, similar to a number of conditions, but importantly, it's also conditional on the scheme not being approved by GenX shareholders. It also has a 50.1% minimum acceptance condition. So it's a dual transaction, the scheme for 100%, or if that fails, a takeover bid with a 50.1% minimum acceptance condition at a slight discount. The scheme price, 27.5 cents, represents a 49% premium to the undisturbed GenX share price and a 58% premium to the 3-month VWAP for the shares. The board has indicated, or the GenX Independent Board Committee, which comprises the GenX board except for Kenichi Seshimo, the representative from J-Power. He's kept separate to any such considerations and discussions. They've indicated they unanimously recommend the transaction, importantly in the absence of a superior proposal and also subject to the conclusions of an independent expert. And that independent expert will be asked to opine on whether the transaction is fair and reasonable and in the best interest of GenX shareholders as a whole. And the GenX Independent Board Committee will, if the independent expert finds that it is in shareholders' best interest and fair and reasonable, then they will unanimously recommend the transaction in the absence of a superior proposal. A transaction booklet is being prepared and will be issued to GenX shareholders in due course. The timing we've indicated is in June of this year, and that would provide for a scheme meeting in July, at which GenX shareholders will consider and vote on the scheme. And importantly, the GenX Independent Board Committee has advised shareholders to take no action at this time while these documents are being prepared. They'll all be dispatched to shareholders in due course, and shareholders will have plenty of time to consider the transaction in full from reading those documents. Importantly, the scheme booklet will include the full independent experts report. Just to recap, as we said at the outset, we've got a $1.1 billion fully funded portfolio of 400 megawatts and growing, and focused on a pretty large pipeline, 2.3 gigawatts of wind, solar, and battery opportunities, over a gigawatt of which we're looking to take to final investment decision this year. That's building on our proven track record of delivery, 150 megawatts now operational, the hydro coming online next year. It's given us the platform to pursue these larger projects and get these high quality counterparties around the table, and that's evidenced in these strong relationships with our tier 1 stakeholders. The revenue mix, we've got a very what I think is a very attractive revenue profile, highly contracted, 83% of the 400 megawatts contracted out to 2055, with strategic exposure to merchant scenarios, including large-scale generation certificates and importantly with Bouldercombe, market volatility. Very important to us is our strong commitment and engagement with community and bringing community and Indigenous peoples along the journey with us as we continue to prosecute our growth strategy. And certainly it remains a focus for us, particularly with our development projects as we take them forward to FID. And as I just recapped, we have received a proposal from J-Power for a corporate transaction to acquire 100% of GenX shares, and we'll be taking that to shareholders targeting July 2024. I think that just finishes the presentation, so I might ask if there's any questions.
Great. Thank you, Craig and Pat. We've now entered the Q&A session. Please type your question into the Q&A box at the bottom of the screen and I will read it out. Our first question is, why is the K2 Hydro senior debt shown as being secured by the state of Queensland?
Secured by the state of Queensland. Maybe secured isn't the right word there, Saskia. Interestingly, with the NAIF, the way the NAIF is set up, they have a NAIF master facility agreement with each of the states that the federal government lends to proponents via the states. So our signatory on our loan agreement with NAIF is actually the state government of Queensland. I think that's probably what you mean there. So state government is the lender of record. However, NAIF is the agent, and that NAIF manages the ongoing facilitation of the loan and administration of it. So, but that's just a unique structure that NAIF has for all of their loans, be it Western Australia, Northern Territory, or Queensland.
Thank you, Craig. Our next question is, what has driven the slip in timeline for the hydro energisation, and by how many weeks is this slippage?
Yeah, we haven't given specific guidance on weeks. This is a very complex multidisciplinary project and being done over approximately 4-year build, and so we're not in the business of giving weekly or daily updates on the timeline. Fair to say that the reason for the delay in energisation has been due to some non-critical path works for the cable shaft being pushed back slightly, and that's resulted in a consequential slip to the date in which the transformers underground will be energised. However, as I said, we don't expect a material impact on the contractual completion date at which we'll be entitled to first revenues, and still targeting that for the first half of calendar 25.
Thank you, Craig. Our next question is, what is the rationale to progress the Bulli Creek solar project before the Bulli Creek battery?
Yeah, look, it's an interesting question because we acquired Bulli Creek hot off completing Boulder Comb and that project nearing completion of construction, looking to do a large scale battery. But we've also been adopting a strategy of offtake led delivery, and certainly saw a lot of demand for the offtake from the solar for that project. So that really has probably a couple of things. That offtake demand has seen us prioritize the solar, but the other piece is just the physical logistics, that the transmission infrastructure required for this development, being multi-stage, is significant, and it will take quite some time to construct. Kicking that off in conjunction with the solar farm will ensure that it's ready at the end of the solar program. If we were to kick that off with the battery, batteries having a much shorter procurement time, it's likely we'd have a battery ready to plug in, but no transmission infrastructure there. So it all works quite neatly to focus on the solar first, have that committed with the transmission infrastructure under construction, and then the battery to follow in 25. So that both two projects will be ready to connect into that infrastructure at about the same time.
Thank you, Craig. Our next question is, how is the contingency budget overrun tracking given the delays at pumped hydro and also the previous additional cost overruns related to the water ingress event?
Yeah, we haven't, we've guided the $10 to $15 million cost increase as a consequence of the water ingress event. The reason for that disclosure, $10 to $15 million on a $775 million project is not material. The reason for that disclosure specifically was that the project was no longer within budget. We are still tracking broadly to the budget, the revised budget of $790 million. So there's been no update to that we've had to do, that we're able to give at the moment.
Thank you. Our next question is, can you provide a breakdown of Boulder Combe revenue and projection for first year of operation?
I can hand over to my CFO once I find the mute button here to give that update. Obviously, we aren't in the business. Certainly, I don't know anyone in the battery business that's able to give an accurate forecast, because as we know, these revenues are going to be very lumpy, and will be structured around these sort of price volatility events. However, Pat, do you want to give an update on the breakdown of?
Yeah. So the revenue from generating from the battery for the quarter was 2.8 million, and we also had 1.4 million related to the construction project. Going forward, we're looking towards more the energy arbitrage revenue streams rather than the frequency events, and that's just the way the market has moved as of late. Again, the summer period, January to March, much higher revenues in that period when there's higher volatility, higher demand for energy. You get those peak events. It comes off quite a bit in the autumn periods, but then in winter again we expect more volatility as higher demand picks up. So it is a bit lumpy. So I'm reluctant to give a month by month forecast of revenues, but yeah, I think if we can kind of continue along that path as we have been doing the last quarter, a bit softer, would be happy with that. I think we originally guided the 12 to 15 million per year, and we're sticking with that guidance.
Great, thank you, Pat. Our next question is regarding the bids. So the question 2022, the Grok bid at 0.25 cents was dead, stated as undervaluing the company. The battery came online in November 2023, and the pumped hydro has progressed, noting some delays. Please explain why this bid by J-Power in April 2024 at 0.275 cents is compelling to deserve the unanimous support of the board.
Thanks, Saskia. A little bit to unpack there. I might just start with referring to the transaction. I don't think it was Grok. It was a consortium of Stonepeak and Skip Capital, the other half of Atlassian. And just to maybe recap on that, we initially received a non-binding indicative offer from that consortium in July of 2022, and that was for a price of 23 cents per share. The board rejected that initial proposal. However, we received a subsequent proposal of 25 cents per GenX share in August of 2022, and as a consequence of that, the board agreed to grant a period of due diligence, and also indicated that should that proposal result in a binding proposal at the same price, that it will be willing to recommend that to GenX shareholders in the absence of a superior proposal, and obviously subject to an independent expert concluding that the transaction was fair and reasonable in the best interest of GenX shareholders. The water ingress event that was referred to in the question, that occurred in that process, and look, we haven't explicitly linked the two events. It's fair to say the water ingress event did result in a prolonged due diligence period for sure. The announcement on the 28th of December, it wasn't actually that the transaction was rejected by the GenX board. The discussions with Skip and Stonepeak ceased. There was no binding proposal provided by them at the time, and therefore both parties went their separate ways. So I think that's very, very important to highlight, that there was no binding proposal at 23 or 25 cents, and therefore we all moved on. In terms of the engagement with J-Power, which has been, things have moved on quite a lot, including the global macro environment. We received, as we announced in early March, we received a non-binding indicative offer from J-Power in early February, and that was for this dual transaction structure, a scheme of arrangement, and a takeover bid at a price of 24 cents for the scheme of arrangement, or 23.5 cents for the takeover bid. And we announced it in March that was rejected as undervaluing the company. J-Power subsequently came back with a revised NBIO at 27.5 cents for the scheme and 27 cents for the takeover. And the GenX independent board committee I referred to earlier, that's the board less the J-Power nominee director, Kenichi Seshimo, who's excluded from all discussions concerning this transaction. They carefully considered that, and obviously in the context of GenX's business and the risks profile that remains in our business and things we have ahead, as well as the value that we've created, and recommend and agreed to unanimously, if that was to materialise into a binding proposal, recommend that to shareholders subject to no superior proposal emerging and the findings of an independent expert. And as we announced on the 12th of April, we did receive that binding proposal, and that enabled us to move forward with a transaction implementation deed, which governs the arrangements between the two parties to essentially take this to shareholders. It's important to note that the IBC's recommendation is premised on the findings of the independent expert. There's an independent expert that will be appointed by the GenX Independent Board Committee, and they'll have to meet certain independence requirements, and they'll be completing a full evaluation of GenX's business and determining whether the transaction is fair and reasonable and in the best interest of shareholders. And the recommendation of the IBC is subject to that caveat. The full independent experts report will be included in a transaction booklet that's going to be mailed to shareholders looking like June for consideration at a vote in July. And so shareholders will be given all of that material and therefore have a significant amount of material and information to consider how they wish to respond to the transaction at the scheme meeting and or via the takeover bid. So maybe that kind of was a bit long-winded, but just wanted to give some context for this transaction versus the other one, which was some time ago and in different contexts, which never materialised.
Thank you, Craig. Our next question is, the board granted J-Power exclusivity in March and the TID reconfirms that exclusivity. Does this mean that the company can't consider superior or competing proposals?
Thanks, Saskia. That's a good question. It's an important one to clarify, I think. When we announced the confidentiality arrangement following and exclusivity arrangement following the initial NBIO from J-Power, it was termed soft exclusivity. That's an industry term, essentially, which provides that GenX isn't able to go out and solicit competing proposals to J-Power, but we are able to respond to inbound interest in a competing proposal that we reasonably believe may result in a superior proposal being, at a higher price or superior in other ways in terms of its terms and conditions. And that's a very important point. As a listed company and with this transaction getting a lot of media attention, it's no secret that GenX at the moment is in play. And if there are parties that are interested in GenX, the board is free to speak to them if they have an inbound interest, and we reasonably believe that their interest may result in a superior proposal. So certainly if there are other parties out there looking at making an approach for GenX, we're able to respond to that, subject to those caveats, and of course the detailed terms and conditions of the transaction implementation deed.
Thank you, Craig. Our next question is, when will the independent expert be appointed to provide their opinion on the proposed J-Power transaction? And is it known yet who that expert will be?
Yeah, well, fair to say we have a booklet that's going to contain the independent expert's report being published in June, and that needs to go through certain rounds of regulatory review. We have appointed the expert. The GenX Independent Board Committee has appointed the independent expert, but the identity hasn't been disclosed publicly. That will all be detailed in the transaction booklet along with the independent expert's report. So yeah, we haven't disclosed the identity of who it is, but rest assured they're a professional party. Their business is to prepare independent expert reports for these sorts of transactions, as part of which they'll be confirming their independence. Their report gets reviewed by ASIC, by the court, and obviously by us and our advisors. So yeah, the details of the independent expert and their report will all be included in the transaction booklet to be released sometime in June.
Thanks, Craig. Our next question is, given the Australian investors have supported the company for many years when the project carried a lot of risk, why should the board ignore investor expectations at a time when a substantial re-evaluation of the project might be expected?
Look, I think the board's role, I think we're referring to the IBC here. We can't get confused because it's important that the board is acting, in the absence of Mr. Seshimo for anything relating to this transaction. Their job is to consider the interests of GenX shareholders as a whole, and in doing so, they have evaluated the proposal from J-Power. The price of it obviously is quite important. The near-term cash certainty that it provides at a significant premium to the GenX undisturbed share price against the risks of GenX continuing to implement its strategy, and obviously subject to the findings of the independent expert. They've indicated that they believe it is in shareholders' best interest as a whole to proceed with the transaction, and therefore they're proposing to take it to shareholders for a vote. Now, shareholders will have the chance to vote on the transaction at the scheme meeting. If the scheme is unsuccessful, they'll then have the opportunity to accept or decline the takeover offer. So the board has premised its position, based on all of that information and in those circumstances to come up with its unanimous recommendation.
Thanks, Craig. Our next question is, can you explain why J-Power knows all about the NAIF concessional loan, but GenX shareholders don't know very much?
Sure. I guess, well, firstly, it's important to note that the information that the independent expert will be relying upon is identical to that which J-Power has been given access to. So I think that's important because they're conducting evaluation of the business essentially on behalf of the GenX shareholders, and therefore, they'll be looking at the full suite of information that J-Power has had access to. Look, GenX is, and maybe let's go back to this slide because I can. As part of our business, we are required to keep things commercial in confidence. It's fair to say, if we had to disclose every little detail of every single agreement we've entered into, it would be very difficult for us to do business with any counterparty who have to factor that in. Sorry. To their decision to do business with GenX. So really, we've had to be select in the disclosure we've been able to make with the agreement of our counterparties to ensure we give as full a picture of our financials as we can. The NAIF debt, we've provided details of the tenor of the debt. It matures in 2036. It's a fixed interest rate, and it being $610 million plays a material part in that average interest rate of 3.02% that we've published. Look, that's kind of the limit of the information we've been able to disclose publicly without breaching the confidentiality requirements of our facility with NAIF. But I think there's sufficient information in that to clearly identify and capture the value of the NAIF loan. And look, similarly, that applies to our revenue outlook. And really, this slide's been in our presentation for some time with the consent of our stakeholders to show, while we haven't disclosed the detailed pricing of all of our offtake agreements because that is considered commercial in confidence, it gives a clear picture of what the outlook for the business looks like based on its 400 megawatts committed, and obviously the cash flows coming off that through the EBITDA margin that applies to those revenues. But yeah, look, otherwise we are restricted in disclosing the precise details of all of our agreements because we need to continue to be able to do business with our counterparties, and there certainly would be a reluctance to do so if we had to disclose every little detail of every agreement.
Thank you, Craig. Our next question is, have higher interest rates, US dollar and commodity prices placed pressure on the bankability of Kidston Wind in light of the impending financial investment decision? Is there concern around this project viability from a minimum cost of capital perspective?
Look, with every development project, we have lots of variables moving all the way up until financial close. A very easy one to sort of illustrate there is foreign exchange. A lot of our contracts rely on the AUD US dollar exchange rate, and that's all fixed at financial close, and therefore the farm cost of the project is confirmed until the day you sign the contract in some circumstances. So with all these things moving, there are ups and downs. We certainly are facing a higher interest rate environment, or have been for some time, and we're factoring that into all of our costings and pricing discussions throughout the project. It's fair to say also that there has been a bit of a reset in wholesale power prices, which is driving a more attractive revenue pricing from off-takers. So as with all developments, these parameters will all be sort of moving and won't be confirmed until we get to final investment decision. I think we're expecting that we'll have a better pricing environment from a financing cost perspective as well towards the end of the year versus today. So all of those factors will play a part, of course, in the final investment decision and the economic viability of the project. But we're confident that we'll be hitting that timeline of FID later this year.
Great, thank you, Craig. We've just got a few linked questions here regarding the NAIF loan. So how many NAIF drawdowns have already occurred? What was the last NAIF drawdown interest rate? And is this paired to construction progress payments? Is that monthly, or when a preset limit, for example, 20 million maximum credit facility is hit by real site works? Is this timing delayed or offset by a few weeks?
Wow. Look, I guess, well, I can answer some of that. Obviously, the NAIF loan is drawn monthly. So how many months have we been in construction for now? I think it's probably 36 next month. And we had our first drawdown in June. So we're probably at 30, 33, 34 NAIF drawdowns, and they vary in accordance with construction milestones, of course. And there's a whole payment profile under the EPC contract that underpins the bulk of the NAIF proceeds being utilised. And it's fair to say the NAIF interest rate is fixed for the entire NAIF loan, so there's no change in interest rate month to month. Otherwise, we're not going to comment on specific drawdowns for each month. I think we'd be getting a little bit into the weeds if we were to go there. So, yeah, I'll probably pass on the balance of the question.
Thank you, Craig. There are no further questions. Please, if you have any follow-ups, feel free to reach out to the Investor Relations contact on the bottom of the ASX announcement. And I'll now hand back to Craig for closing remarks.
Thanks, Sas. It's obviously pleasing to see our first full quarter of operations from Bouldercombe and continued progression at Kidston Hydro, and really exciting to be getting into the thick of the fit out program. And I hope I gave everyone a bit of a taste for what that's going to look like over the coming months. And obviously it was good to be able to respond to some questions out there on the transaction with J-Power. And yeah, we look forward to sharing the documents that we discussed with shareholders in June for their consideration at a meeting in July. But thank you all.
Thanks, everyone. That concludes our webinar for today. Thank you for participating, and you may now disconnect.